Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I have Michael Markowski, CEO Money contributor and Director of Research with me. Michael, welcome back to the show.
Hey, Mike, it's always great to be with you.
All right, what insights do you have for us today? I think you want to talk about fortunes that are going to be made in cryptocurrency, regulated cryptocurrencies, right?
It's cryptocurrency infrastructure providers. Big distinction here.
Okay.
Cryptocurrencies, as you know, Facebook, everybody made a fortune in Bitcoin. Last year was the year, 17, for people to make fortunes in crypto. You could have, the first crypto transaction was with Bitcoin in 2010 in Jacksonville, Florida, and a guy paid like, he used 10,000 Bitcoins to buy 3 pizzas. And where does Bitcoin go to? Well, it went from $900 at the start of 2017 to almost $20,000.
It went over
Bitcoin.
$20,000.
Right.
I watched it.
Yeah. In fact, if you look at this chart here right now, if you look at this chart, you'll see the price volume of Bitcoin over the 10-year period. But what happened is that that's the cryptocurrencies. What I'm talking about is cryptocurrencies infrastructure. That's a completely different, that's a different animal. So let's talk about crypto, what happened with crypto. It was really a Wild West scenario for crypto. It was very similar to any Wild West, any new thing that comes in. Bitcoin was founded in 2009, started becoming liquid in 2010. Nothing really was going on in crypto until really to the start of 2017. So at the end of 2016, the total amount in crypto, aggregate, and all the cryptos, Ether, Bitcoin, all of those, was $18 billion at the end of 2016. By the end of 2017, that erupted and went to $600 billion in 1 year. I've never seen anything like it in my life. If you look at it, here's the chart here. Look at this chart. You can see the chart, just what happened. This is just 1 year. The chart I showed you before was over 10 years with Bitcoin, but this is cryptocurrencies, the aggregate market value. I mean, look at this thing.
Oh, yeah.
There's nothing, I've never seen anything like this in my 40 years that I've been in the markets, you see that kind of growth. You can see that, for instance, Coinbase was growing at a rate of 2.37% a month. Look at this chart. And they were projecting that by the end of 2020, they would have 187 million users, clients, Coinbase, Coinbase. So you can see that there was growth everywhere. There was over 1,325 cryptocurrencies at the end of 2017. Things couldn't have been better for crypto and anybody who invested in crypto in 2017. And then what happens next? What happens next is, guess what? Fraud comes in.
Yep.
Okay. Right. Always, that's what the next thing is. The scam started, right?
Or they got discovered. They didn't just come in. They finally actually got discovered.
The scams start revealing themselves.
Right.
And the government of Vietnam announced that they were banning all crypto exchanges in Vietnam because their citizens had been defrauded $650 million in early 2018. The SEC came in and charged its first, crypto exchange, and so the SEC all of a sudden got tough, and as a result, it's caused a serious liquidity problem for crypto, because the SEC is out closing exchanges that were not regulated by the SEC, were all of a sudden closing themselves down voluntarily because they don't want to be charged. They don't want to be criminally charged and all that stuff. There's over 200 exchanges in place. So right now, crypto is grown to probably at least 20, 30 million people in the United States alone. You've got all these crypto exchanges around the world. Probably there could be 50, easily 100 million people right now that hold cryptocurrencies. And so crypto's got a big problem, because if I was a business major, and I understand the product adoption life cycle. And in any product, in the product, there's a curve called the product adoption life cycle curve that any new product or technology must get through. in order to get to the masses, okay? And the first stage is to get the innovators. And look at this chart up here. You can see that this is the curve this is all over. There's studies on this. You can see the chart here. The first stage that a new product or invention must get through to gain acceptance is the innovators,
right?
Okay. And the second area is the early adopters. So crypto got to the innovators, it got to the early adopters, and then all of a sudden, now with this lack of liquidity and all that, crypto's got a serious problem. It's got all this momentum, but it's got all these exchanges. Okay, so it's really at an inflection point. It's at a momentum interruptus inflection point.
Got it. What do you think is going to happen next? Because I interview a lot of crypto exchanges. I mean, I've had like 5 or 6 of them come through here.
Well, what's happened is the crypto exchanges, all of them are operating, they're not operating under SEC rules and regulations. They're all illegal. All of the crypto exchanges are operating illegally. None of them are SEC are operating under SEC. So as what you have here, you have over 200 exchanges and all these hundreds. I mean, in the United States, you have 20, 30 million people trading cryptos, but none of them are trading on a regulated exchange. So what's happened? Here's the problem. So back to the hacking. I mean, there was 2 exchanges that were hacked in South Korea alone in June of this year for $35 million each. So think about it. You have these. If you had to invest your money on the stock market and worry about it being scammed or hacked, what would you think? What would that do to the capital markets? Right. Think about it. If you went out and made an investment in IBM, and then you found out that your exchange, the New York Stock Exchange, was hacked, and people lost hundreds of millions of dollars, or that your brokerage firm that you're doing business was hacked.
It's pretty obvious what would happen.
And people made hundreds of millions of dollars. So what has to happen is they have to have the same regulated infrastructure for crypto worldwide as they do for all the exchanges. You got the German Bourse, you got the Chinese, you got the Japanese, you got all these exchanges that are unhackable. You can't do this. Brokerage firms around the world, they have strict regulations, continuity, technology, all that stuff in place that they have to have that in place to have a license to do business. So you're talking, you have a huge problem. You have 200s of crypto exchanges that are not regulated, not licensed. These guys are all going to be shut down. 90% of them, I project, are going to be shut down.
Everybody I've spoken to is going to the SEC to try and get that resolved and become regulated. They're all pushing in that direction.
Well, here's
the ones I talked to.
Absolutely, and you've got them on your show. But here's their problem. Their problem is to get regulated as an exchange. And there's 3 things that are needed in crypto. Take a look at this chart here. This is the infrastructure right now. For the regulated financial markets. Okay, the value of the companies that are providing that are over $600 billion. There's exchanges, there's investment banks, and there's online brokers. Okay, these are the key ingredients for the infrastructure for the current financial markets. So that infrastructure has to emerge for crypto. You have to have the New York Stock Exchange of crypto must emerge. The Goldman Sachs of crypto must emerge. The Ameritrade of crypto has to emerge for crypto to get going again so it can cross the chasm and get to the mass market, okay? So the key is that with these regulated exchanges, they need to be put in place as soon as possible. And there's these 3 exchanges, right?
I get it.
Okay.
And tell me about the exchanges.
No, let's go back. Let me ask you asked a question I didn't answer, and that is, why can't these existing exchanges go out and do it? The reason why is it takes at least a year or 2 if you started a broker-dealer right now in the United States today, it would take you until 2020 to get regulated in all 50 U.S. states.
Right.
Okay.
Yeah.
Okay, because guess what? You've got to pay. They've got to check you out. You've got to have licensed professionals that have all the licenses. They got to clear all that through every state. Mm-hmm. You have, can you get licensed in a few states? Yeah, sure, you can get licensed in a few states. The other thing I want to make perfectly clear is there's two classifications of cryptos, by the way, while I'm on this. There's cryptocurrencies and there's crypto securities tokens. Mm-hmm. I believe that, my guess is that over 90% of all the crypto out there, what we call cryptocurrencies, the 1,325, are really cryptocurrencies in disguise. That's another reason.
You mean tokens?
Crypto security tokens. Crypto securities, not currencies. There are going to be very few really currencies. Currencies, on their hand, will be regulated by the CFTC, the Commodity Futures Trade, and the CBOE or whatever. Those
Chicago Board of Options Exchange, and the Chicago Market.
Whoever regulates the Euro and the
NFA and the CFTC.
Right, CFTC. So the key is that these exchanges are not going to be able to get regulated fast enough. So those three, I've identified three already licensed, regulated U.S. companies that have emerged. I've identified the crypto of the New York Stock, the New York Stock Exchange of crypto. I've identified the Goldman Sachs of crypto, and I've identified the Ameritrade of crypto.
Okay. Are you keeping those names quiet? No? Or
No, let's go over them.
Yeah.
Now, I'm projecting that all three of these, if you go again, look at what I showed you before, market cap of the regulated infrastructure providers right now for the markets in the world, $600 billion right now. I'm projecting that the total market caps of these regulated crypto infrastructure providers will at least by 2030 will be at least half of that number, 600. That's $300 billion. Okay, so for starters, I believe that the first three companies each have the possibility of going. The first three that I've identified to go to 10 billion market caps by 2025, and then we'll see what happens after that. Now, based upon that, one of them, the exchange, I'm projecting, will grow by 35 times from its current value and that exchange is tZero.
Okay.
Okay. tZero is going to grow by 35 times in value to a 10 billion valuation by 2025. Okay. And the reason why I think tZero is the solid horse to beat, and your institutional investor watcher should be all over this thing, is they have a token offering right now that's underway, a $250 billion token offering. And
what's the value of the token now?
The value of the token is $10.
$10.
Okay. So it's 35 million tokens outstanding. That's going to close later this actually it's going to close next week. The token exchange token offering, which has been available. So they're going to be well capitalized, well financed. They've got a partnership with the Boston Stock Exchange. They're going to emerge as the leader. For a couple of reasons. First of all, Overstock owns 80% of them. And Overstock.com was the first online merchant to accept Bitcoin for products and services. They were also they're on the forefront of everything in this crypto area. Overstock is also the first to launch a crypto securities token offering, and successfully launch one. But their founder, Patrick Byrne, is just a visionary investor I've been tracking, a visionary CEO. He's the founder of Overstock. He's a young guy, and he's really got a vision to change the world. I really think he's going to be like the next Jeff Bezos or Elon Musk or whatever. I really think
moving in this direction. I'm going to have to go with you on that.
He's moving in that direction. The other thing is they brought in a group out of China, which was the first institutional investor in Didi Chuxing. And Didi Chuxing has gone from a minuscule market cap 5 years ago to second only to Uber in terms of as a private company. It's gone to like a $50 billion market cap. So they got the most powerful, what I consider, they've got a creme de la creme premier group they just announced is buying 160 million of these tokens, of these 250 million tokens.
Got it.
So I believe this thing's going to rocket right away to become a unicorn company like that. I mean, this thing is really, people need to be aggressive and get all over this thing, because there's nothing going to stop this thing now, because with that base and their base, that group out of China, which are very savvy and they're visionary investors as well, with a lot of capital, because they invest in Didi Chuxing, this is going to be a big winner. Okay.
Got it.
Now let's talk about the Start Engine. Okay. Start Engine's really going to become the Goldman Sachs of crypto. Start Engine was founded by Howard Marks, and he's their CEO. But Howard Marks is an interesting guy, because out of college at the University of Michigan, he went into and he actually became a programmer. He's got a computer science degree. Mm-hmm. He wound up as a young man and took over Activision when it's really after the video game company, when it was having serious problems. Got Steve Wynn, the Steve Wynn that recently had to leave, Wynn.
Heard the name.
Yeah, right. We've heard the name. To be this partner, and basically this financial partner, they went and took this Activision, it was practically in the throes of bankruptcy. Uh-huh. They took this thing, and now Activision is the biggest video game maker on the planet, okay? Mm-hmm. I mean, he was the chairman of Activision. So Marx left Activision, saw the need for entrepreneurs to be able to get financing. Computer had a incubator that he and his partner, who's now the chairman of Start Engine, had put together. And so they started Start Engine, and Start Engine has emerged now as a leading investment banker for startups as well as cryptocurrencies. So they're regulated by the SEC. They just did an offering at $5 a share that they closed off on, and their shares are liquid. But the point is they closed that offering off. They're doing now another offering at $10 a share that people should be all over this thing on Start Engine, because they've got over 20 cryptocurrencies right now that are all listed on their platform, or crypto securities tokens, mm-hmm. that are raising capital on their platform. So they are really they're really another one, and I'm projecting that their valuation is going to go up by 70 times over the next, between now and 2025. I'm projecting that it'll go up 7 times between now and 2020 on Start Engine. And this is another one that's the second, was the investment. Now we've covered the exchange, we've covered the investment bank, so now let's talk about the online broker. Who's going to emerge as the Ameritrade of crypto?
Right. Who is it?
Well, it's Choice Trade, and Choice Trade. Let me tell you about them. Choice Trade is one of there's a handful of online brokers in the United States that are pure what I call online brokers. Choice Trade was founded in 2000. Best about the time the dot-com bubble burst, so they were never able to get the capital to compete with E-Trade, Ameritrade, and Interactive Brokers. Okay, so that's why you don't know their brand. However, the guy who founded them is still there. He's taken the company, and because they're now licensed to do business in all 50 U.S. states. Mm-hmm. They've got clients in 110 countries. So they're doing business globally. And they've continued to keep their technology in line. Even though they didn't have the money to go market, they've had to keep their technology really ahead of the curve on E-Trade and Ameritrade. And for this reason, they have huge. They've announced they've been raising capital for the purpose of becoming the first online broker to not only do crypto, enable investors to invest in crypto, but also to invest in startups and also in the secondary market for startups. So choice trade, if you look at this performance chart here, how they stack up against E-Trade, Ameritrade, and Interactive Brokers. They offer 4 different things that the other 3 don't offer. It's because of their technology. They offer robo trading. They offer startups investing in terms of secondary markets. So remember, in a previous interview, we talked about how what's happening is people can now, like a piece of real estate, you can go buy a startup, and now because of the Jobs Act, you can actually list it, like a piece of speculative real estate. Buying a piece of real estate out, thinking the interstate's going to come in.
Yes.
Okay, all of that. Okay, so what's going to happen is that so you can list your startups, buy and sell startups on Choice Trade. You can buy and sell cryptocurrencies on Choice Trade, and you can also they're also micro investing. They're going to usher in micro, which will enable investors to invest as little as $10 into opportunities. That's how low their cost basis is. So this thing is
equity trades.
And this is so critically important because once you integrate, and here's an example of a mock-up. They could look at this up here. This is an example of a mock-up of their their account statement here, and you can see here that you can see where I've outlined the areas where you see crypto and startups. They're going to be the first broker to enable investor to have the complete package. Okay, so Ameritrade's not going to let an investor do that. E-Trade's not going to let an investor do that, and this is going to really accelerate, the adoption of startups and cryptocurrencies by mass investors worldwide is what this is going to do.
I get it.
So, so this one, I'm projecting a 35 times increase in valuation between now and 2020.
On Choice Trade.
On Choice Trade. On what's going to become the Ameritrade of online, of crypto online. And I'm looking for a 350 times your money increase by 2025 Okay, and again, with this, what we discussed in this interview here is that these have huge competitive advantages because it will take all these crypto exchanges at least a year to two to pass the regulatory muster to compete with these guys. So those millions of people that are right now trading cryptos on 200, if you're trading a cryptocurrency or a crypto securities token anywhere in the world, all of these exchanges are not operating within the government regulations. All the governments are going to regulate them. It's going to take time for them to become regulated. You've got to be a holder. You've got to get in and be an investor in these three crypto U.S. regulated exchanges. They're regulated by the SEC.
I get it.
One thing I forgot to mention to you is there are two public companies that are plays in this arena. Okay. One of them is Overstock.com. It's 80% owner of tZero, the exchange. Mm-hmm. So people can go buy Overstock.com.
And still get the momentum play.
Right. And I'm projecting Overstock.com will go up 7 times in value over the next few years at least. So it's a good play. There's also the one we'll talk about in a future show, which is called InvestView, and it's a penny stock. Okay, mm-hmm. It's a penny stock.
I know of them.
Yeah, it's a penny stock company, and it's in the infrastructure side as well through its Cuvera brand. It's got a subsidiary called Cuvera, but we'll talk about that
in another show.
In another show. Bullsandbears.net, as you can get access to this information.
That's bullsinbears.net.
And you can also get access to this information at dynastywealth.com.
Okay.
Okay, dynastywealth.com. has access to how to invest in all of the companies, but the public companies are available via thebullsandbears.net.
Mike, thanks for being a guest on the show.
Okay, thank you.
You've been watching CEO Money with Michael Yorba. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.